On today's World Insight, China's GDP growth rate rallied to 6.5% in the last quarter of 2020. How will China build on its economic growth this year? And Germany's ruling CDU party picks a new leader. What does this mean for Germany's general election in September? Here is our host, Tian Wei.
Hello, I'm Tian Wei, and this is World Insight. We begin today's program with China's economic performance last year. Despite the grave and complex environment posed by COVID-19 pandemic, China has shown steady economic recovery, exceeding expectations amid a roller coaster of a year. It's the only major economy to grow for the year 2020. The latest official data was released on Monday morning. Let's take a look at all the numbers.
Unhindered growth amid a pandemic. According to China's National Bureau of Statistics, the country's gross domestic product grew 2.3% in 2020. Its full-year GDP also exceeded 100 trillion yuan, or 15.4 trillion US dollars for the first time. The GDP dropped by nearly 7% in the first quarter of 2020 as the virus began to spread, but the GDP quickly recovered and posted an expansion of over 3% in the second quarter and over 4% in the third quarter, hitting 6.5% in the final quarter.
The pandemic prevention and control work has achieved major results, and benchmarks for economic and social development were accomplished, exceeding expectations.
Meanwhile, China's job market remains stable, with the surveyed unemployment rate in urban areas standing at 5.6%. The country's value-added industrial output, an important economic indicator, went up 2.8% year-on-year in 2020. There was also strong momentum in the high-tech investment, growing by 10.6% last year. E-commerce and information services are major boosters. China's successes in controlling the pandemic also helped expand its share in global trade. The country's economy now accounts for around 17% of the global economy. And the World Bank Group said that it expects China's economy to expand by 7.9% this year, while the global economy is on track to grow by 4%.
For the latest analysis of the Chinese economy, joining us in Beijing, we have Professor Liu Baocheng, who is the Dean at the Center for International Business Ethics from the University of International Business and Economics. Meanwhile, we are also joined in Hong Kong, Edward Xie, Chairman and CEO of Gaofeng Advisory Company. Gentlemen, welcome to the program. The number looks quite encouraging, in fact, particularly considering what a year it has been for the year 2020. Now, are you satisfied, Professor Liu, of the last quarter growth rate, 6.5% for the year 2020?
Well, that is really phenomenal because when the world is really reading highly negative 3.5 on the worldwide basis, and Chinese performance, from negative 6.8 in the first quarter, and it's a gradual but a very steady recovery, and this is really exceptionally good, and not only in terms of injecting confidence to Chinese people, but also serving quite a locomotive for the world economy.
I see. Mr. Xie, markets around the world are reacting to the number. Of course, there are much more also complicated factors such as geopolitics and many other things people have to think about, and the pandemic still with us. So how much confidence are you reading in these numbers?
I think the numbers are good, and it demonstrated the two effects. One is that China has contained the pandemic quite effectively, and the rest of the world has not. And so I think the numbers are pretty reflective of what the reality is. But as we go into 2021, or as we are now in 2021, I think the world is becoming a little bit more uncertain from the standpoint of geopolitics. The USA is going to have a new president pretty soon, and the relationship between China and U.S. is at best uncertain. And also, the pandemic is not over yet. Many countries are still struggling with the pandemic, and even there are some spikes in China as of today, as you know. And so there's a lot of uncertainty. So it remains to be seen how 2021 will play out.
Right. Professor Liu, China's success with the economic performance has much to do with the pandemic prevention and control. Now, as Mr. Xie just mentioned, there's clusters of outbreaks in different provinces, particularly northern part of China, because the winter season. As we know, this virus, its nature. So will the first few months for this year extremely difficult for China?
Well, we have to be aware of the fact that the virus has not really disappeared or killed. So everyone has been standing on guard, from government to every citizen in China. And the fact that we have draconian measures and there is restrictive conditions over there, and people are willing to forsake what is quote unquote of sort of personal freedom to comply, is a merit that is proven to be very effective. But in the meantime, we have to really grapple for the balance between the containment of the virus and in the meantime recovery of the economy, and people have regular income with the stable job. So this is something that's still very challenging. We
All economies are dealing with that on
services.
different scales, and certainly with their different approaches. China's approach earlier proved to be quite successful. We'll see what's going to happen for the rest of the year. Now we are also joined with honor Jim Rogers, who is, of course, a very well-known international investor and also chairman of Rogers Holding. Mr. Rogers, good to see you again.
I am delighted to be here, Chen Wei.
On this big day of numbers, tell me more about your gut feelings about Chinese economy.
I mean, it's pretty clear China's the only big economy in the world that had an up year last year. So what more can I say? You've done it. You've proved it. Actions speak louder than numbers.
As you said, actions speak louder than numbers. But with the pandemic now still having clusters of outbreak, the service sector will once again be hit. Now, China is on its way to design its economy, to elevate the levels, as they said, of its economy, more to the service sector. So now, how do you see this current situation? What does it mean for China's plan of moving forward with the service sector?
But Chen Wei, not only did China do better than the rest of the world, they did it without spending, without borrowing gigantic amounts of money. Yeah, they borrowed some, but nothing like America or Japan or Europe. They printed some, but nothing like the rest of the world. So China has done a much better job on many, many, many levels. And yes, the service economy is going to do better. Your airports are opening, your restaurants are opening, so people are going back to work and doing things that you and I would love to do. I'll come to Beijing and we'll go dancing.
All right. I'm going to be waiting for you here in Beijing. I hope that day will come soon, sir. I know you have a wonderful motor ride in China during the 1980s. That was quite a journey. I'm sure you can make your record this time as well. Mr. Rogers, having said that, though, let me ask you about the uncertainty the other two gentlemen touched on about the geopolitics and also the pandemic still. How much do you see the Chinese economy can still grow with this momentum when the rest of the world seems to be very much suffering?
Chen Wei, the rest of the world is now recovering, and that's going to be good for China. America was behind. Many countries were behind the Chinese recovery. But, I mean, the first quarter in America compared to last year's first quarter is going to look great. That's true of Japan and everywhere else. So at least for the next few months, everything compared to last year is going to be much, much better. And that, of course, will help China, because you're one of the largest trading nations in the world. You should worry about the end of the year. Don't worry about the first 6 months. Worry about the last 6 months.
What about the last 6 months?
Well, I'm worrying because, America's printed and spent huge amounts of money, borrowed, Europe, Japan, everybody has. So I would suspect that by later in the year, we're all going to start getting a little bit worried because they borrowed as much, not as much, they borrowed a huge amount. And so somewhere along the line, Tianwei, things have to start slowing down again. And so that's why I'm worried about the end of 2021, 2022.
Now, the incoming president of the United States, Mr. Biden, has been proposing his agenda, 1.9 trillion US dollars for various areas. Where does the money come from? A lot of people are asking that question. How do you see that, Mr. Rogers? And how do you see that vis-a-vis, what Chinese economy can expect?
Anyway, it's not a good time to be young in America because the Americans are adding gigantic amounts of. It's time to be good, to be old in America, because the young people are being left with just. It's never happened in recorded history, the amount of debt that America now has and that we've added for young people. Yeah, it's great this year. Mr. Biden's going to spend a lot of money and things are going to feel good. And the central bank has printed a lot of money. I worry about my teenage daughters.
They're staying with you in Singapore, aren't they?
Yes. We're all here in Singapore.
Say hi to them for me, because they were really lovely when they were
certainly.
visiting our building last time. I remember very well, Mr. Rogers. Let me ask you, Mr. Xie, about that. So it is not just about one country's economy doing well, you do with all the measures, but also how the other economies are functioning. Now, with this growth rate, it's likely China GDP will surpass that of the United States 2028. However, it will have to the qualities of it have to be looked at very closely, and what's going to be the future possibilities of the U.S. economy and its impact on the rest of the world also needs to be looked very carefully, Mr. Xie.
That's correct. I think the size of Chinese GDP will continue to increase, and most people would expect, or some people expect, China will become the world's largest economy by 2027, 2028, or thereabouts. I think it's not just the size that matters, but also how China is going to grow from where it is today to that sort of future target. And according to the new 5-year plan of China, as you know, China is putting a lot of emphasis on the innovation. And innovation is going to play a major part in the future economic development of China, both through the state effort, but also through the private entrepreneurs. Mm-hmm. And hopefully through the innovations, we're going to increase the quality of our growth in all dimensions, including in services, as you mentioned, but also in other areas like manufacturing, high tech, and so on. So, let's see how it goes, but that certainly is the target by the Chinese government, and I think China will be able to achieve that.
Mr. Rogers, now in China, the country has to plan about the rainy days. For example, what if geopolitics get worse between China and the U.S., and China and some of the other countries, and what's China going to do, both about its car industry, its high-tech industry, even its smartphones. So, Mr. Rogers, the country has put out a lot of policies to encourage innovation within the country. On the other hand, we do expect, we do hope things will get better in terms of relations between China and the U.S. Do not know, though. So, Mr. Rogers, how do you see this uncertainty and its impact on both the plan and likely the realities of innovation-related growth?
Well, Tianwei, whenever the politicians have problems, they blame foreigners all throughout history and all over the world. It's easy to blame foreigners, and that's what the Democrats and the Republicans were doing. Now we have a new government, at least for a while. The pressure is going to be off. They're not going to be smashing China as much as they did before. Maybe next year they'll come back, but for a while the pressure is going to be off. But the problem from America's point of view is that China is innovating very rapidly. You produce something like 10 times as many engineers every year as America does. They're not all good engineers, but some of them are very, very good. Look at Tencent. You know the names in China that have done very, very well. So China's going to go Huawei. You know these companies. They're doing much better technologically than America. Your money's on the internet. You're way ahead of the rest of the world is putting money on the internet. So China is innovating already, and it's because you've got all these smart engineers. I wish we had as many. Unfortunately, your schools at the moment are better than our schools in America, and we Americans are paying the price because your engineers are doing beautiful, brilliant jobs.
It used to be, Professor Liu, applications that China is best at. For example, with all the latest development in technologies. Now, with much more emphasis being put on innovation as a result of possibly several years of the geopolitics between China and the United States, how much do you see the structure of China's economy is likely to shift toward innovation? With what speed do you expect?
Well, I'm optimistic, but with quite a level of caution, because we bought technology or we use generic technologies that are prevailing for free from the rest of the world, and that we have to admit. But really now, if we really want to run to the front line to innovate on indigenous basis, that's not an easy job, because that requires not only a bunch of engineers or scientists, but it requires the universities, whether they are able to deal with the research, because research and development are totally different things. So development there are really to play out with application, but the basic scientific foundation will have to be there. And number two is that the social environment will have to be there by government being really catering not only to a few labs, but rather to the power of innovation of the whole nation by intellectual property protection, and also by encouraging the whole nation to really concerted efforts to build that type of innovation. And the mid-income trap really is derived from this tipping point. Now we have come across a hallmark of 10,000 US dollar, but to move ahead, and that's not an easy task.
Mr. Xie?
I share some of the concerns as Professor Liu, but I think if you look at the track record of how China has been innovating in the last several decades, especially through the entrepreneurs, I would say that I would lean on the on more confident side. There's a lot of hurdles, a lot of challenges, but with the effort that the whole country is putting in, both by the government as well by the incredible entrepreneurship and the engineering that Mr. Rogers talked about, I'm actually quite confident that China will be able to tackle most of the hurdles and be able to come out as a very innovative nation in about 5 to 10 years.
Jobs is another big issue, isn't it, for every economy? Now, you see a huge number of blue-collar worker jobs actually that are available, because now, if you look at the export numbers, it's really going up almost 19%. But on the other hand, the graduates from universities are having quite a challenge of finding the jobs that they desire. So, Mr. Rogers, what do you make of much more complex situation about the economy than just the numbers?
Well, this has happened throughout history,
Yes, indeed.
When countries or when economies have problems, many people suffer for a while. But in the end, the countries and the people and the industries that come up with new thoughts and new products, those are the ones that get jobs, and then they do well again. I'm optimistic about the long-term future of China, much more so than I am of many other countries. I mean, Japan is a disaster compared to China in the next 30 years. So yes, you'll have problems, but don't worry, Chen Wei. Make sure your children speak Mandarin.
That's always the key word that you want to share with us. How are you looking at it, Mr. Rogers, from the investor's perspective? Now, if the economy of China is as good or as promising as you just described, what does it mean for investors? And how would they, weigh all the geopolitics vis-a-vis the real economic growth prospect of countries?
Well, I have not been buying shares in America. The stock market's at an all-time high, but I have been buying shares in China. Your market is still down a lot from its all-time high. I bought Chinese wine stocks recently. You know, some industries got hurt very badly by the pandemic. Restaurants closed, bars closed, people didn't go out, people didn't travel. You know, airlines, hotels, travel, tourism got destroyed. So those are areas where I have been buying in stocks in China, not so much in the U.S.
I see. Mr. Xie?
I'm also quite hopeful about the investment market in China. I think if you look at the prospect of economic growth for this year, China will likely to be perhaps still the only or one of the very few countries that is going to do well economically. So if we rely on the economic underlying principles to try to judge how the capital market will look like, I think the Chinese capital market will do pretty well this year.
Professor Liu, last year, almost at the end of it, there are several pieces of good news. For example, RCEP, which is between China and also the ASEAN countries, and also China-EU investment initiative, which of course needs to be approved by by the EU Parliament and the European Union. But still, they're very good news. How much do you think these news would have its impact on the trade aspect of China? And what does it mean, once again, for the Chinese economy? After all, you see China's economy exports really grow fast as a result of the other parts of the world still, for the rest of 2020, in a dwindling stage.
Well, we have to be aware of the fact that even though we have committed to the RCEP and also BIT with Europe, they are not really taking effect yet. But the fact of this type of commitment is really injecting a lot more confidence to both Chinese companies and also to the to the regional community, because they have been worried when China was issuing what was termed as double circulation, and there was worry about a reversal of the market-driven economy and open door policy. And now this is really a very strong message that China wants to engage and China wants to further open and deeply reform its self, was not only in terms of custom tariff, but also in terms of investment environment. And this is really something encouraging because investors invest into the future. And this is the future China is really committed.
Mr. Rogers, final words?
Well, yes, exactly. China recently signed a free trade agreement with 15 countries, many of which were allies of the United States. People in Washington are now catching on, Tianwei. The world is moving on without America right now. The Trans-Pacific Partnership is going forward without America. The new free trade agreement's going on. I think you will see people in Washington say, wait a minute, we better get back to Asia. We better do something to be friendlier, or we're going to be left behind.
Very interesting picture. All of you trying to explain to all of us. Thank you so much. Hope you are safe and also prosperous for the year 2021, everybody. Jim Rogers, Edward Xie, last but not least, Liu Baocheng. Really appreciate it, gentlemen. Thank you so much.